Preston, welcome to the Bitcoin Standard podcast. How are you doing, my friend?
Doing fantastic. It's we were just saying it's good to see each other. It's been a little bit.
It has been. We need to catch up and update our understanding of what's going on. Obviously,
Yes.
a lot happens in Bitcoin, but also at some level, not much happens in Bitcoin because it just continues to be the same thing. But it's always good to keep going back and looking at what's going on. So Michael Saylor today just announced he bought, 18,100 Bitcoins for $1.1 billion. We just had him on the show last episode.
Oh, wow. Okay.
Yeah. I
mean, what a buy.
Yeah. And like you wouldn't tell. I mean, it's just pretty amazing. Like yesterday, he knew that tomorrow he was going to tell the world that he's bought 18,000 Bitcoin. It was just another day.
Yeah.
Just another day in the office when you're Michael Saylor.
You know, what I found interesting was the basis of his entire position was, I want to say it was like 33,000 USD was the basis. And I mean, he's just been stacking like a maniac nonstop for 4 years. And, people were looking at it and be like, what is he doing? He bought another billion. Like, this is crazy. But then when you look at the basis of where he's at for all of the Bitcoin that he's acquired, what is the number, Safe? Like 240,000 or somewhere in that ballpark, I think.
Yeah. Closing up to 250,000, I think. Yeah.
Yeah. And I mean, if this cycle, goes where some of us think it might go, I mean, I just can't even imagine how this is going to be viewed from, the traditional banking and more just from like a traditional S&P 500. Where would that put him on the S&P 500? Probably top 100, right?
I checked, I think currently he's at the 780 or so largest company in the world, although that was before last.
In the world.
That was before the buy. So now he might be probably a bit up. But yeah, I mean, 700, I think you could see him climbing up that rankings. The thing is, this is the really dangerous thing, which I don't think a lot of people have truly internalized, which is that this isn't some kind of limited play wherein, let's say, you're going to be selling phones or smartphones. It's as incredible as it is a technology. There's only at the end of the day 8 billion people, and they're all going to buy one smartphone, maybe two. So there's a limit here at 16 billion smartphones. The market is done. You can't do any more than that. And then you need to start playing around with VR sets or other things to try and make it work. But Michael Saylor doesn't need to do anything different. And there's no limit to this game, because the more he plays, the more he wins. The more he wins, the more he can take out more leverage to buy more Bitcoin. The more Bitcoin goes up.
Well, and I think this last buy was more common. This was more of the debasement of his common stock and then the transmutation into Bitcoin, right?
Oh, okay.
Yeah, but the last one that he did, he raised, and I might be wrong about that. He's done so many dang buys. He's done so many buys. It's hard for me to kind of keep track whether he's using, convertible debt or just issuing more common stock. I think I remember reading that. He's been doing both. Yeah. And what's interesting too, and this is rarely talked about, is how reinforcing both of these two strategies are. So when he does when he does the convertible debt deal, what it's doing is all the fast money that's just trying to arb the spread on his on his debt and also his common stock creates this deeper pool of liquidity in his common stock, which then allows him to issue more common stock in order to raise cash to then buy more Bitcoin. And so without this play happening over in his convertible debt in the fixed income market, you wouldn't have all the fast Wall Street money plowing into the common stock to basically basically hedge their fixed income position, because they got to hedge it with common stock. And it's rarely talked about, but I think it's one of the brilliance of his play is the deeper the liquidity is on his common stock, the easier it is for him to basically take whatever times earnings his common stock is, issue more of it into the market and transmutate it into cash and then Bitcoin. Like, it's crazy how reinforcing these two, approaches he has. And we're not even talking about the operational business, which is the most fascinating part. So like you understand accounting at a very deep level. If we were going to list this as an asset on his balance sheet, because we're not even talking about an operational business here. This is just financial engineering. that is super value accretive in Bitcoin terms to the amount of Bitcoin going on his balance sheet. Like, what's the value of him just being a public market and actually having the awareness and the intelligence to be able to do this if you were going to put it in terms of like an operational asset? Like, his company bangs out 75 or 100 million a year, and it creates, however, you divide that number by the current Bitcoin price. That's how many Bitcoin his operational business is able to stack onto the balance sheet. What is this other strategy that literally is no employees other than him and the CFO sitting down with a piece of paper and pen and saying, all right, we're going to buy more Bitcoin through common stock issuance and convertible debt deals? Like, how many more Bitcoin is it? I would be fascinated to see the analysis on like how much more Bitcoin he's able to accumulate because of this additional hidden asset.
Yeah. And in a sense, it's a ticking time bomb, because the value of this strategy that you mentioned, him and his CFO sitting in the office and deciding to issue more stock or more convertible notes, is a function of the number of companies, an inverse function of the number of companies following this. So as long as he's the only one doing it,
yes,
then this is essentially an S&P 500 NASDAQ capital markets level monopoly. As long as nobody else is doing it, he's the only one who's doing it, and he's getting all the demand in the financial markets that he's listed on to go toward that strategy. And so the only way that he stops having this, I mean, the only way this slows down is other people copy him, and more people start doing it. If there were 50 companies in the S&P 500, then I guess Saylor's differentiation at that point, I mean, he's still obviously going to be differentiated. He's still going to be the first, but he's not going to be attracting as much of the capital as all these other companies are. But if that's happening, then if all these other 50 companies are happening, then Bitcoin's price is likely appreciating significantly. And then his accretive business from the fact,
like, I don't know. I think it's going to get pretty hard for people, even figuring it out right now, that have massive treasuries, to catch up to MicroStrategy with the size of how much Bitcoin they've got. And can you imagine if Apple announces that they're basically taking a Bitcoin position, which, by the way, the fact that you had Goldman Sachs come out, and how much did they put on their balance sheet? And this is obviously through the ETF. I want to say it was like 500 million that they put literally on their own balance sheet. And so everybody's talking about, the ETF, the bankers are just sucking fees off the ETFs. There's major Wall Street banks that have put it on their personal, on their company's balance sheet. And I don't think anybody's talking about it. I think this is huge news. And obviously I don't want them to do it with an ETF, because I think that's stupid. And you and I talk about all the reasons why. But them putting it on their balance sheet is a vote of confidence that they actually believe in the value prop, not that they just want to sell and collect fees off of some product that they're dropping onto the market and on the retail. I think that's very telling. And it wasn't just Goldman Sachs. There was some other massive banks that are doing this and putting it on their balance sheet through the ETF.
Yeah. So do you think Michael Saylor has a chance of getting 1 million Bitcoins?
No way. There's no way. I mean, when I'm looking...
Well, I mean, it's 250,000 in 4 years. If he keeps this up, the bigger the Bitcoin position, the more that he can borrow against his company.
Well, that's an interesting spin as far as his ability to borrow against it. But, I mean, that's just so much Bitcoin, Saif.
Yeah, this is a quarter of the way there.
Yeah.
And Apple doesn't look like they're moving their stash and trying to eat at his first mover advantage anytime soon.
How about Paulo? Paulo's stacking it 50 times. He has the capacity to stack it 50 times harder than Michael.
You mean Tether, right?
Tether, yeah. I mean, Tether's about 120 billion of AUM. You've got 5% coupons. So if we're just generically doing some public math here, maybe call it 7 billion-ish that he has cash flowing. 7 billion annualized. Michael, like we said, is approximately 70 million. Okay. So that's an order of magnitude 100 times higher than Saylor as far as what he's cash flowing. Okay. 100 times. And it appears he's a hardcore Bitcoiner that's just plowing all the proceeds into Bitcoin.
Well, not all. The majority of their money is.
A lot of
Uh,
it.
oh, I see. Do you mean all of the proceeds, the operation, the stuff that they
All
get
the
the deals,
all the
the coupons?
coupons. All these coupons that he's getting, right? Which is to the tune of, we're just saying 7 billion annualized. Okay.
Okay.
That he's making off of Tether. Because when Tether first started, whether it was backed or not, I don't know if it's backed now, right? But you weren't kicking off. I mean, you were kicking off 10-year treasuries at what, 50 bips or 75 bips. So there wasn't much money there to be made in, I mean, their assets under management or whatever the hell you want to call that term, was way lower. You were at probably 20 billion, like back when the interest rates were there. But now we're at 120 billion of these, of basically buying overnight money or 3-month money. It's yielding 5%. And so he's banging out 7 billion a year, which is 100x what Saylor's company makes. And it appears that he's taking whatever he's making and just buying Bitcoin with it straight onto the balance sheet of this private company, organization, whatever the heck you want to call it. So, I mean, I think it's good. Safe. If we get a couple more of these, like, I'm sorry, it's just getting so spicy. And we're not even talking about all the ETFs that retail's buying and everybody else. Like, I don't know what the coming year or year and a half looks like, but it's looking like they're going to have to dump trillions of more monetary units into the system globally. And like, I don't know, there's some very big buyers and some people that are total zealots when it comes to whatever their free cash flows are. They're just sweeping them into Bitcoin.
Yeah, I mean, I think in a sense, Tether is kind of doing a direct speculative attack on the treasury because they're taking, yes, wonderful tears of Bitcoin haters.
Sorry to interrupt.
No. So Tether is kind of doing a speculative attack on the US Treasury market because they're taking all the proceeds and putting it into pumping Bitcoin and also demonstrating to the world that, hey, look at our balance sheet. Yes, we are backing our dollars with dollar coupon yielding bonds, but we are making our money from holding a superior asset, which is Bitcoin. And you can join us, and there's nothing we could do to stop you from joining us. But as long as the treasury market continues to exist, it continues to look inferior to this, and Tether continues to stack. And yeah, you're right. I mean, it's fascinating to think about it. It's by far, I think, the world's most profitable company by per employee. I read somewhere it's something like $58 million per employee. Of profit.
Yeah. They had more profit than BlackRock last year in the last 12 months. This is a real stat. Tether made more money in the past year than BlackRock.
And BlackRock has got thousands of people in suits filling out surveys about ESG bullshit. And Tether
but think about this though, Safe. You're talking about the most traditional bank on the planet that's playing a fractional reserve game, meaning I'll deposit $10 and they can lend out 100, and they can collect revenues and profits off of the 100, even though there's only been 10 deposited. Okay. And they're playing against this thing with 150 employees or whatever the count is, right? That is fully backed, I'm assuming that they are at this point. Okay. Fully reserved, and they're eating their lunch. Isn't that interesting that you have like this bank, this traditional bank versus this maybe new, whatever it is, new form of bank, and they're beating them at their own game, which is where you give us a pittance and we're going to issue a ton, and none of it's backed by anything.
No, and they're just doing a full reserve banking experience.
Yeah. And it's in the face of everything that Caitlin Long's been dealing with, which is, I'm going to fully back all deposits. And the government's saying, hold on a second, we can't have somebody actually playing this game by the rules. Like you have to cheat with us, right? It was basically the ruling that poor Caitlin's dealing with, which is, hold on, you can't do that, because if you start playing by the rules, it's going to force everybody to play. And then you have this outside European blob, whatever you want to call Tether. I don't even know what you call it, right? But I do know one thing: they're buying all short duration money. I had an interview with Paulo. This was crazy. I asked him, I was like, what would it take for you to start buying long duration money? meaning 10 years or 30 years U.S. government issuance that has a similar yield, would you be interested in buying it if there was a Bitcoin component, if they were backing the issuance with 5% in Bitcoin? And Safe, he laughed at me. He laughed at me. He's like, no, why would I do that? I can just buy overnight money. It matures in 3 months and I'm getting the same yield. And then I can just plow all of those coupons straight into Bitcoin and I don't have to think about it. I don't have to be right. I don't have to worry about inflation. He's like, no, I'm not going to buy their 10-year or 30-year money. Get the hell out of here.
Yeah. I mean, the United States government's financial institutions are definitely not optimized for the very long term. Or the medium term, even. It's definitely a smash and hit kind of high time preference mode of operation. So yeah, if you do want to get in, you want to be using the short term. I think it makes a lot of sense. And yeah, you're absolutely correct. This is really fascinating because you can't do this in the Federal Reserve System. You can't just set up a bank. And I mentioned this in the Fiat Standard. The whole thing rests on the idea that you have to criminalize non-fraudulent banking, because if you let honest banking exist, then it just eats everything else. Because go to all of the money that's held out there and ask them how much would you how much of your portfolio would you put in an asset that appreciated 1 or 2% in real terms every year. And for a lot of people, that's going to be a significant chunk of their money. They want to take risks with everything else. They'll take a risk with the rest of their money, but they'll put a big chunk of their money, their savings. This is what they think of as their bond, or what people used to think of as their gold holding. You'd want that in something that's very, very, very low risk. And a 1 or 2% appreciation per year is decent if you're not incurring any risk. And that's what you had when you had hard money that you put in a bank that was honest. But we can't have that. Where's the fun in that, right? You can't make interesting economic history from people just running banks honestly. And so the way that the Fed cartel works is that all of these banks have to be in on the same kind of level of inflation, the same kind of level of creating money, so that there is a prevailing level of money creation among all of these banks, and so that one of them doesn't stand out, so that it detracts all of the business from all the rest of them. So this is why the Caitlin's Bank, and also before that there was the Narrow Bank, they can't get their licensing. But this is the really fascinating thing about Tether, because it just does this using a blockchain and gets around the system, and it's able to do it, and it's grown bigger than pretty much any of the banks out there. Well, I mean, not necessarily bigger than the banks, but getting there. And I think the very interesting thing is that all these banks, you can't really see any of them doing a 10x in the next 10 years in terms of their size. No. You can very easily see Tether doing a 10x.
Yes.
You could entirely see it happening even under the radar. I mean, we've seen the last 10x from, what are they at now? 120? Is that how much AUM?
Yeah, 120 billion. Yeah.
120. So it's 120. It wasn't too long ago when it was 12 billion. I don't even remember when it was, but it wasn't 10 years ago. It was maybe 5 years ago or something like that. I don't remember. It's not entirely inconceivable they do another 10x. I mean, just more people in Brazil and in Turkey and in South Africa and in Lebanon are going to start using this. And there is so much potential for new users that these demand could continue to go up. And it is becoming one of the world's most important sources for demand for treasuries. So it's putting the U.S. government I guess in a sense, it's creating a conflict between the U.S. banking oligarchy and the U.S. government. Because on the one hand, we can have this thing that does honest banking without fractional reserves and doesn't allow for credit creation, and it'll pump our treasury bags because it'll replace all of the world's terrible fiat currencies with
a tokenized version of fiat currency.
With a tokenized version of the dollar. It's basically going to eat the monetary premium that all these other central banks have and give all of that to the U.S. government. But it can also undermine banks. And that's the interesting part.
Principles of Economics, my complete guide to understanding economics, is now available in hardcover, audiobook, and ebook from Saifedean.com, Amazon, and many more booksellers worldwide. And now I am also teaching a course based on this book on my website, Saifedean.com. Principles of Economics will run the whole academic year from September to June, and will have a new lecture every 2 weeks, as well as weekly live online discussion seminars open to learners from all over the world and from all walks of life. Whether you're a student, a professional, or a retiree, you are making economic decisions every day, and this course will arm you with the wisdom of centuries of economists to improve your economic decision making. You'll also get a free book of Principles of Economics if you sign up for the course. Go to Saifedean.com and sign up now.
I think this is why you're seeing them lobbying so hard. What is it, the SAB 121, or I forget what the bill is that they're trying to get pushed through for stable coins. And you're seeing the banks are the ones pushing for this, because I think, I mean, if I'm BlackRock or I'm Goldman Sachs and I'm looking at this entity, this European entity that's just growing like a weed, and they're making more profit than the biggest bank in America. I'm looking at this and saying, what game are they playing, and how in the world can I start playing this same game by issuing JP Morgan coin or Goldman Sachs coin, the dollar coin, right? I think that's what they're trying to do. I think they're trying to get into this. And I think this is a really important point. When I start talking to people about all of this, they immediately get triggered, and that's understandable. But I do want to throw this out there. If Bitcoin goes to, like Sailor's talking, by this year it's going to be 13 million a coin or whatever those numbers are, right? If we're going to go to these numbers, how in the world do people think that that's going to happen? And it has to, in my opinion, it has to happen through the aggressive expansion of the dollar itself. And you can throw the euro in there at the end. But at the end of the day, it's really the dollar that has to expand at some absurd level. The example, I go back to a monopoly board, because everybody understands a monopoly board really well. If I wanted to take the value of Park Place, and let's say the value of Park Place, and I don't know the value like written on the board, but it's probably like 400. If I wanted to turn that into 800, how I do it is I just have to add more monetary units. I got to double the supply of monetary units in the game. And then all of a sudden, all the equity around the board starts getting bid because it's desirable and it generates cash flow as the players go around the board. And so how do I get the price to 800? Well, I double the supply of the money. So when we look at Bitcoin and we say there's 21 million units at the terminal, end state, how do we get the prices to be $1 million a Bitcoin in dollar terms, or 10 million in dollar terms? Well, you have to expand the number of units of dollars in the system. And guess what? All of these stable coins that are coming out, all the banks that are trying to issue stable coins, how do you think they're doing it? They're relying on the government to expand it. There's something that's aggressively increasing the money supply and the speed at which the dollars can sail around the world into unbanked areas. There's tons of growth in the amount of debt that's there, so they have to monetize it. And there's no better way to monetize it than to tokenize it and get it out the door, because there's a buyer of short duration money that is yielding these crazy yields. And so people look at this, they're scared of it. They're saying this is bad. And I'm saying, how else do you think they're going to expand the number of monetary units without something like this at the helm? And we get into where it goes next. And I'm sorry to keep talking here, Saif, but where a lot of people go next is they're saying, well, from a privacy standpoint, they're just going to tap on Tether's shoulder or Circle's shoulder and they're not going to let that transaction go through. And I look at that person and I say, yeah, no kidding. That's the game they're playing. That's the game they've been playing. Like, this is just, an extended version of that. And if you don't think that they can control that, you're absolutely crazy. They control every one of these rails. Look at Ethereum and all the other blockchains. They're centralized. They're centralized for a reason, because the only purpose that we've seen pop out of any of these blockchains is the proliferation of dollars. right? It's not because people want to go trade, Dogecoin. Well, you get all these speculators that go out and do that, but there's no real use case behind any of these tokens. The only use case is dollarization or turning the euro into a stable coin. That's the only thing that's popped out of all this quote unquote crypto that's happened, is the proliferation, is the buyer. Now, let me take it upstream from that, is the buyer of short duration debt. Right?
That's the use case of the crypto space. I think that's a great way of putting it. Crypto just produces more demand for the US treasuries. Yeah, that's a good way of putting it.
Bingo. So we can get all upset and be like, oh, this is, well, if you want your bags pumped as a Bitcoiner, you need the expansion of fiat to take place, and they're desperate. Like they're totally desperate for a buyer. They're totally desperate to crack into new markets to expand the number of units, because they've got to keep, inflating away their debt and their buying power. And this is how they do it. This is how they do it. I'm not saying I like it. I'm just saying this is part of this process of bridging over to a new system that works better. Because at the end of all this, people are going to trust Bitcoin because the price keeps going up in dollar terms, right?
Yeah, and it's not just about pumping people's bags in Bitcoin. I think the really important thing here that people miss is that, yes, of course, they'll have surveillance capacity over all of those things, but they already have surveillance capacity.
They already have it.
Yeah, exactly. So it's, Bitcoin Lightning is the way out of this. And so it's on you if you want to use USDT. I don't recommend it. I don't use it. And I don't recommend people hold this. But of course, I recognize that there is an enormous demand for it. And I understand that people in places who don't have functioning banking systems and functioning currencies will need to use this. And it's entirely understandable.
Safe. They can use Lightning now, today. They can. It's just that you have a lot of vendors that aren't wanting to accept it because they haven't conducted the work and the intellectual rigor to understand why they should desire that over the dollar. And for a lot of them, if I'm going to cut them a break, obviously, it's because all their expenses are denominated in dollars. And so they want to balance that out, and they don't want to have, market volatility in the price of Lightning by only accepting Lightning. That's the rationale why it's taking time. But I think you get far enough into this, into watching this thing. I mean, if we hit 500,000 a Bitcoin, all of a sudden, some people are looking at this and are saying, well, why am I taking dollars? Why don't I start taking, layer 2 Lightning as payment? I don't have to KYC. I don't have to do any of that garbage. I can come up with an address and I can start accepting this stuff right now. And I don't have to play this stupid game.
Yeah, and this is where I like to say, let he who has no US dollar checking account and credit card cast the first stone at the USDT users, because ultimately that's what it is. I mean, that's what you have. You have got an account with Citibank in the US. That's what it is. It's very similar to USDT. It's just a lot less efficient than USDT, but that's what it is. And the vast majority of people do use dollars in some way or the other, whether you're in the US or whether you're not outside the US, in which case you're using currencies that are backed by the dollar. But pretty much everybody wants to have access to the dollar network. Everybody wants to use it for making payments and for receiving payments. And this is entirely acceptable, and not acceptable, entirely understandable in a world in which the vast majority of cash balances are in dollars. Money is not an individualist technology. It's a network technology. And so if everybody's using a particular protocol for emails, you're going to have to go along with that. There are very significant costs to trying to move from one to the other. And so for most people, most of their income, most of their expenditure is in fiat, and they're going to continue to need it. The important thing is that as they switch their cash balance from fiat to Bitcoin, that is what creates the difference. That's what moves the needle. And I think this was some of the a lot of this kind of doomsaying about, oh, well, the U.S. government is going to use Tether and Bitcoin to continue dollar hegemony misses. And I know Whitney Webb has spoken about this quite a bit. I think what's missing here is the fact that, Tether can boost demand for treasuries, but demand for Bitcoin continues to go up and the supply of Bitcoin is a lot more scarce than treasuries in dollars. And so the inevitable consequence of this is that the value of Bitcoin goes up. And if the value of Bitcoin goes up and the network of Bitcoin goes up, eventually it gets big enough that it offers itself as a serious alternative for more and more and more people who can exit all of the horrible things that you have in the fiat system and in the USDT system and have a way of protecting themselves from inflation. And this is, I think, the key thing. Yeah, so some of the way in which they discuss is that the US government is going to start buying Bitcoin and use that as the way to anchor the dollar and allow themselves to have more inflation. And that, I think, is the missing part in this analysis. That's the faulty part in this analysis, because if they do that, that takes away their ability to do inflation. Yeah. If they back the dollar with Bitcoin, they can't print more Bitcoin. If they start buying Bitcoin, they're just pumping Bitcoin, giving Bitcoin more liquidity and telling the world, yeah, why would you hold treasuries? Yeah. We don't even want to hold our treasuries. We're looking for alternatives that are better than the treasuries. And that's going to undermine the US government's ability to create more and more and more inflation. So one way to think about it is that the ability of Tether to pump the US dollar gives the US dollar another maybe 50%, maybe another 100% extra demand. If you think about all the money in the world that would go into the USDT, yes, it's a lot of money, but most of that money is already dollar demand in another form. In other words, people are going to be dumping their local fiat currency, say the Argentinian or Brazilian or Turkish currency. But that currency itself produces demand for the dollar. So if you go from your local fiat central bank to USDT, it's not entirely new demand for US treasuries, right? Because a lot of that demand was for currencies that were buying treasuries in dollars. And so I think you'd be generous to say 100% more demand for dollars. I'd say 50 is probably generous as well. There's just not that much extra demand to go for the dollar because the dollar is already so big around the world. It's something like 60% of world's cash balances, I think.
Yeah.
So there's not that much headway for it to grow. Whereas with Bitcoin, you're talking about 0.5% of the world's cash balances or something in that range. And so there's a lot more headway for it to rise. And as it goes up, it become if this USDT thing becomes more and more common, as you were saying, it just opens the door for more and more marketing for Bitcoin and more people to come in and get into Bitcoin, which lifts the price up. And then that is an enormous limit on the government's ability to print money, because if they start buying Bitcoin, they pump the price of Bitcoin while reducing the price of the dollar. And if they back the dollar with Bitcoin, and at that point, the Bitcoin price might get away from them, and then the price of Bitcoin keeps going up. And then at that point, it would make sense for them to back the dollar with Bitcoin in order to prevent the dollar from continuing to slide against Bitcoin, at which point you're on a Bitcoin standard and it's over. Bitcoin is money, and all the US government does is that it packages Bitcoin in paper and credit form, and people can use Bitcoin without having to go through the US government. So in that case, I think all of this, I think most of the worst things that the US government is able to do in the world today are because of the inflation. And I think that solves the vast majority of, or at least reduces significantly the vast majority of the world's problems, because it's really because of the inflation, much more than the surveillance. So you can get around the surveillance even today because you can use Bitcoin, but you can't get out of the inflation. Well, I mean, you can get out of the inflation as well with Bitcoin. But the inflation, I think, is far more consequential, because the inflation is what funds everything else. I don't even think you could probably get away with this level of surveillance without the inflation to finance the enormous deep state that has been working for it for so many decades.
You know what, Saif? This is the misconception, and you hear it being propagated by legacy financiers. Like Brent Johnson has this dollar milkshake theory, and I think what people do is they hear this theory because the theory is relative to all the other just total crap currencies that the dollar is going to get stronger, which I totally agree with. The dollar is going to keep getting stronger. It's going to take over everything relative to all these other crap fiat currencies. Okay.
Exactly. They're beating up the Argentinian peso and the Turkish lira. Congratulations.
Yeah, it's crushing it. Great job. But where they're missing the boat is the dollar dies by gorging itself, almost like a 500-pound human that's sitting on the couch all day just eating potato chips. Okay. And it can't eat enough of this fiat food. And it's literally going to kill itself there on the couch. That's the dollar. Okay. And how it's doing this is it requires the suffocation of spreading its dollars all over the world and having to overextend itself. And then the next year it has to double that, right? And that's how the dollar dies, is through gorging itself and spreading itself so far and so much, because at the end of the day, there's this little thing called Bitcoin. And there's only 21 million of them. And as this thing continues to gorge itself and expand itself relative to Bitcoin, it's going to look like a total scam to anybody that is paying attention. We've been in the space for a few years. We can see it. It's very clear to us because we've seen it relative to the dollar for enough years and enough cycles at this point that it's just freaking obvious. But a lot of people are just now starting to show up and ask these questions and see the dollar being expanded, and they're seeing the price. You know, when it hit 70,000 and went down to wherever it went, 16 or whatever it got down to, everybody comes back with the headlines yet again on the Wall Street Journal, Bloomberg, you name it. Bitcoin's dead. No, it's not dead. It's just resetting itself against this dollar behemoth that took a break to go to the fridge to get more potato chips and, you know, fast food out of the refrigerator so it could gorge itself once again in the next cycle. So this is all I'm trying to say. The dollar expanding itself does not mean it's winning. And that is a common misconception that people have. Just like going back to the Monopoly board, if I double the money supply, it's not that the fiat money that I'm adding into the game is winning. What's winning is Park Place that just doubled in value, which is scarce. You can't create any more Park Places on the board, can you? But you can sure as heck add a whole bunch more fiat currency into the game. That doesn't mean it's winning. You don't want to hold that garbage. I don't know. It gets frustrating because you hear these arguments all the time from people.
Yeah, and I mean, I obviously would much prefer if the whole world would just get on Bitcoin tomorrow. But I'm certainly trying my best.
It's an education gap.
Yeah, and I'm certainly trying my best to make that happen by not shutting up about it and setting up this podcast and talking to everybody who would listen. But at the end of the day, it's just it's a lot more complicated than downloading an app. It's people hold Bitcoin to the standard on WhatsApp. You know, as long as Bitcoin doesn't have that WhatsApp moment where everybody goes and downloads it and then everybody's talking to each other on it, then it seems to be failing. But money is a lot more complicated than a social network because you can just add 10 messaging apps on your phone, and then the one that clicks better works better, and then everybody ends up on it. But money is different because you have to hold your cash balance in something, and you have to have liabilities, and you have to have your income coming in that thing, and you need to make a decision about it. And it's not easy to switch your cash balance from the currency that you use for everything to some other currency, because that involves costs going in and out, and there's a risk, and you need to think about how to size your position. Most Bitcoiners, of course, learn those lessons the hard way. They get in with too large a position or too small a position and live to regret it, and then start understanding the basics of finance and how to position yourself and how to get in and how to think about an asset that is this volatile. But it's not an easy thing to do. So you could go all in and then have an 80% drop and get ruined, lose your business or something like that. Or you could go very slowly and then watch as the price appreciates and see that you maybe should have gone in more aggressively. And with Bitcoin's volatility, all kinds of experiences are available for everybody. You could have done very well with the same strategy if you followed it 6 months later or 6 months earlier. But ultimately, this is a tricky thing, and it's not something that's going to happen, I believe, after the last 15 years. I don't think it's something that's going to happen overnight. It's going to be a long process of people learning this thing slowly and developing a larger and larger Bitcoin cash balance until Bitcoin cash balances overtake fiat cash balances. I think this is really where...
Yeah, I would agree with that. Yeah.
That's in my mind the finish line. Bitcoin needs to become bigger than fiat, and that's what matters. And if that happens, then nothing else matters, because then inflation has no power. Few people hold cash balances in fiat, and so printing a bunch of money is just going to devalue that fiat a lot more. And at that point, that's really truly defanging the state, defanging all of the worst excesses of the state all over the world.
The Bitcoin Standard podcast is brought to you by CoinKite. CoinKite are my favorite makers of Bitcoin hardware. They produce the legendary Open Dime, the first Bitcoin bearer asset, as well as the reliable Cold Card hardware wallet, the excellent stainless steel seed plates for storing your seed phrases, and the block clock. Now, CoinKite have produced the Sats card, a card the size of a credit card which can store Bitcoin and works great as a gift. CoinKite have just produced a limited edition gorgeous Bitcoin Standard Sats card, which carries the Bitcoin Standard logo, and you can get it from coinkite.shop/Bitcoin Standard. Use the code Bitcoin Standard to get 5% off your purchase. This podcast is also brought to you by the Bitcoin Way, your professional Bitcoin IT team offering you personalized, secure, and comprehensive solutions for every step along your Bitcoin journey. The Bitcoin Way offer live concierge service to guide you with your Bitcoin cold storage, running your node, privacy best practices, inheritance planning, corporate strategy, and multi-sig solutions. They don't touch your coins, they guide you through the process of acquiring your coins and securing them. If you'd like to make your setup safer and more reliable, book a consult with them and see what they have to suggest. If you want to give someone the gift of Bitcoin, get them this professional service that will ensure they start off knowing exactly how to manage their coins and not lose them. Go to thebitcoinway.com and start Bitcoining more confidently.
Yeah. No, I totally agree with you. And I think that is the breaking point where trust really starts to break down in the old fiat system that everybody's accustomed to. And I think that until we get to that point, the reason it's taking so much time is because there's just a massive educational burden that has to be overcome. And I'll emphasize this with an example. So sometimes I'll talk to people that know nothing about Bitcoin. We go into the nuance. I explain to them for hours, maybe multiple engagements as to what it is. And then, they haven't invested a whole lot of time, but maybe 10 hours in, they're like, oh my God, I get it. I'm going all in. Right. And then they go and they buy a position. And this is typically associated with we're up 100+% on the year, and that's why they're even interested in talking about it. And so then they learn a little bit, not a lot, but a little bit, and then they want to go all in, or they want to take a really huge position. And the problem is they haven't done, the number that's thrown around by a lot of Bitcoiners. You have to at least do 100 hours to truly understand this thing, and they haven't done that. And so then they take a larger position size that doesn't match the intellectual rigor that needs to go with a position size that can handle a 70% drawdown in fiat terms. And so they take this big position, the price moves in the opposite direction, and then they sell. And then some other cognitive or psychological bias prevents them from ever getting back into it again. Call it the Mike Green syndrome. That they can never go back because they missed the boat because they knew about it in 2012 or whatever they tell you, that I can't go back into it. And then they have, Bitcoin derangement syndrome.
Yeah.
Right.
Everybody's got that story. And it's, when you get into Bitcoin, sorry to interrupt, but when you get into Bitcoin, everybody keeps telling you the story and they think they're so special. Yeah. Everybody heard about Bitcoin before they bought Bitcoin. And it's nothing to brag about to say that I heard about it a very, very long time, but I haven't bought it. It's just, it's an advertisement of being extremely stubborn in a extremely counterproductive way to your own happiness and success and well-being in life. Everybody thinks their story is special. Oh yeah, well, my cousin told me about it back in 2013 when it was at $500. Okay.
Safe, have you ever been told my so and so told me about that in 2006? I've actually heard this.
Yes.
Sorry to interrupt.
Yeah, I've heard those stories as well. A lot of people, I don't know, they just enhance the experience in their minds that it keeps going back in time. But yeah, it doesn't matter when you first heard about it. What matters is when you get it, when you understand it, when you start really stacking it, because all of these stories can't buy you an extra Satoshi. There is no way to insert this into the protocol and say, well, my cousin told me about this in 2011 and I could have bought it $1. So you can't be charging me $60,000 today. I mean, come on, cut me a deal. That doesn't work on Bitcoin.
No, it doesn't. But you hear it all the time.
Yeah.
But that's going to take time. I think then, like, to your point though, is let's say we get $1 million per coin. When we look at the market cap at that point, now it's getting really large to the point where I don't know that people necessarily need to conduct the intellectual rigor. They're looking at it now out of fear of not having it, simply because they've seen their neighbor or other people that have benefited so tremendously from Bitcoin. And there's so many people that they know at this point that have benefited from it, that the burden of the intellectual rigor goes down, I think, with time. And the sheer number of people that are participating in this new network and this new money, that they're just like, they're participating out of fear as to having to convince themselves that they're right. But yeah, I think we're pretty far off from that. I think you're at, I don't know if you've done the math on where you think that point is, but I think it's definitely in excess of $1 million a coin before we just kind of have this moment where people are like, oh God, I got to own this. This is how this is unfolding. It's kind of like in the mindset of, because I think everybody knows there's something wrong. They don't understand what the underpinning of it is. You and I obviously are pretty strongly opinionated that it's the money. And, if you see Bitcoin at 2 million a coin, I think at that point, you're starting to have people saying, oh, this is what was happening this whole time, is the dollar was dying and I need to own this thing over here.
Yeah, I would say, I think the most obvious tipping point in my mind would be when Bitcoin becomes bigger than the treasury market. Because the treasury market, what makes the dollar continue to work is the fact that the treasury market is the world's largest, most liquid market. So everybody says, all of these BRICS countries, they're going to replace the dollar amongst themselves by, I don't know, using something else. Well, nothing is as liquid as treasuries, and that's what it comes down to. And so all of these large financial institutions, large central banks, they need liquidity at size. And you just can't get that in many places. There aren't that many markets where you can come in with $5 billion and buy up a bunch of stuff and then sell it in a few months' time without causing massive carnage to the price on the way up and down. And the treasury market is the world's biggest market in that regard. It's got $25 trillion of things trading every day. Well, not trading every day, but it's the size of the treasuries is $25 trillion. I think at a point when Bitcoin is bigger than that Bitcoin becomes the most liquid asset that people want to allocate to. And I would imagine at that point, Bitcoin would still be volatile. So it would probably need to go a little bit further, although Bitcoin does have an added advantage over treasuries in that treasuries are non-fungible tokens, if you want, in that they are shitcoins, in the fact that one treasury is not equal to one treasury. There are all kinds of different maturities and dates. And so you're buying the 10-year or you're selling the 15 or 20 or whatever it is. And each one of these markets is a lot less liquid than the market overall, whereas Bitcoin at 25 trillion is one market where all of the things are fungible with one another. It's all one Bitcoin equals to one Bitcoin. One sat is one sat everywhere. And so it's a lot more saleable and liquid because it is homogeneous. So if you think of that, it might be even a lot earlier than bigger than the treasury market. But because of the volatility, I sort of still say that, I think the treasury market is the is the milestone. It's the finish flag, because at that point, it's a lot bigger than any of the individual treasury issuances. But it's likely going to still be a little volatile, because at that point, Bitcoin's still nowhere near done. Even if it's bigger than the treasuries, it's still got a long way to run. There's still a lot of monetary assets out there to eat, a lot of government bonds all over the world to eat, a lot of gold, a lot of monetized real estate and monetized stocks. So we won't be done at that point, but we'll probably become the world's biggest, most liquid market and the world's largest cash balance asset.
Yeah.
And then from then on, I would say that it's, that's the fort conquered. And then it's about putting out all of the side resistance, eating up the rest of the monetary assets. But that's the final boss that you got to defeat.
It is the final boss. That's a great way to put it. Yeah, no, I agree. And I think it's just one additional note, as they continue to expand the money supply and it gets more aggressive by the trillions, by the tens of trillions, that it's a moving Alice in Wonderland kind of ruler. And if you're continuing to look at the entire world with those, through those fiat units, I think it's going to be challenging to know where that parity point is. But if you're using Bitcoin or you're using physical real things, commodities or whatever, additionally, I think that it's going to be more obvious to kind of know maybe where that parity point is, or where you're at parity with the treasury market, right? Because the dollars are just continuing to blow out. And people ask me about Bitcoin's volatility going into the future. In dollar terms, it's going to be insanely volatile. It's only going to get crazier as we go along. But if you're comparing Bitcoin to something that's physical, call it the price of oil, or a home, or even equities at that point, the price is going to stabilize way out there in the future against that physical real thing, which would be the thing that has a scarce number of units, which would be Bitcoin. So if you were going to draw out the chart, it's going to look crazy volatile moving further in the time scale if you're just looking at fiat, and it's going to be the opposite for physical real things that you're comparing Bitcoin to.
Yeah, I think as Bitcoin grows, I would imagine that it continues to that it would become less volatile in real terms, because as the market grows, I think individual buyers become less and less consequential and will have less of an impact on the price. But if it was easy, then it would have been done already. I think it's just people underestimate just how much of an enormous undertaking it is to replace all of the world's monies. And it would be great if Satoshi had invented some magical way where Bitcoin was appreciating at a fixed, steady rate with no dips. Imagine if we just set it at 40% a year, guaranteed, algorithmic.
Yeah. In game theory, volatility is a tool that a game designer uses to allow participants of different skill to play the same game. So as an example, let's say you and I are playing chess. Let's say I'm an amateur. Let's say you're incredible. If we would introduce a dice into the game that the weaker player, which would be me, could roll, and maybe I get 2 turns if I have an even number, and I only get 1 turn if I roll an odd number. Because I'm introducing this volatility into the game, the weaker player, me, has a better advantage to compete with the person who has a ton of proof of work and is the skilled player in the game, which would be you. So when we look at Wall Street and we look at how skilled they are in financial markets to be playing this game against somebody who's, the 80 IQer, that volatility that Bitcoin presents in the market is actually providing this opportunity for them to play a game that normally they would get annihilated at but has the opportunity to play really, really well. So when people talk about the volatility and how fierce it is, I think that it's a huge advantage for non-elite or like highly skilled players to come in and just like compete on a level that they've never been able to do before.
Yeah, it's great. I mean, you look at all of these plebs on Twitter who just do nothing but stack sats and outperform every major hedge fund, every hedge fund in the world. Basically, nobody. Exactly. Yeah. And you love it. And they understand it. Like, there's so many of them on Twitter are just so proud of it. And they're constantly rubbing it in the face of all of those people. You know, people who are actually selling you money to tell you some vague hints about what they're doing with other people's money, which they're charging them enormous amounts of money on. All of which, you know, if you keep digging around, you find that they're making a 4% return or a 7% return or a 9% return or a 14% return in a good year. Whereas Bitcoiners cleaning toilets, driving Ubers, performing brain surgery, having an actual life, living actual life, generating an actual income from doing a real job, and just putting their money in Bitcoin like psychopaths and outperforming all of those people. It's beautiful.
Outperforming the hell out of everybody. I mean, it's not even close. It's not even, you know, I remember reading traditional finance books. I mean, that's what my background with the show originally was all just covering traditional finance. And I remember reading somewhere that if you outperformed by 2% above the S&P 500, you were like in the 98th percentile of performers in Wall Street. So, you know, let's say the S&P was 12%. If you did 14% that year, there was only 2% of fund managers that outperformed you. That's how compressed performance is in traditional markets. And so when you look at Bitcoin, that has a annualized compound annual growth rate of, call it 50%-ish over any 4-year period, it's somewhere in that ballpark. I mean, it flexes, you know, it can be way higher. It can be down to 25% on a 4-year basis in the worst performing. Like, you're outperforming by orders of magnitude that are like 6 standard deviations plus to traditional money managers, like, at least. It might even be more grotesque than 6 standard deviations, but you could do the math, and I'm telling you, it is out there on the curve, like way out there on the curve.
Yeah, and this is really why Bitcoin wins. It's not about activism. It's not about people talking about it. It's not about people telling the world this is going to be how it's going to free us. I mean, that stuff is true. It's important. But if that stuff could move the needle, then we'd still be on a gold standard. We'd have voted our way back to a gold standard a century or so ago.
Only to be screwed once again as society, right? Yeah.
It's not going to work. It's not going to work next to self-interest. That's what's going to matter. And it's not just even self-interest. It's not even counting on people to figure this out. It's financial Darwinism. Choose the leaky bucket of fiat money, and you're going to witness all of your precious energy dissipate. Choose the technological wonder that is Bitcoin, and you're going to just be accumulating wealth over time and not getting robbed by inflation. And that's just going to put you in a much better position than people who are not doing it. But yeah, and that's really why the volatility is the opportunity. Because if everybody understood this today and they understood what the end game is, it would be over tomorrow. And then
that's right.
Bitcoin would be appreciating at 2-3% per year for everybody, and it would be very stable. It would be appreciating at a very small percentage rate regularly as everything else becomes more productive. We wouldn't even be talking about it appreciating, because things would just be getting cheaper in Bitcoin terms. And that's the end game. So the sooner you recognize this, the larger the opportunity you have. If you're the last person to recognize this, you don't get any of that monetary energy transfer benefits. But if you're the first person to recognize this, is the first person you buy Bitcoin, you're going to make the biggest return. And so the sooner you recognize it, the bigger the opportunity, but the higher the volatility, because it's still a tiny asset, and then people coming in are going to make a big splash. As it grows, the amount of splash that people can make when they jump in decreases. You know, the last 4 years, remember, Elon Musk buying caused the price to shoot up. Then when he said that he was selling, caused the price to crash down. That was 4 years ago at around 30K or something like that. I think today he's probably going to have a lot less of an impact. Maybe not a lot less, but relatively less. And I think 5 years from now, somebody of his wealth would have an even less and less impact as Bitcoin continues to grow. And so the volatility inevitably declines as this becomes a safer and less uncertain bet over time. And that just reduces the opportunity. That's really where the risk well, it's not really the risk, but that's the cost of the gains. That's how you get it. Like, there's no equity risk. There's no risk in terms of third-party custody when you hold your own Bitcoin. But you've got to stomach the negative 80% every now and then and learn to suck it up and get on with your life and keep stacking sats.
Yeah. I mean, to go to $1 trillion in market cap and then still sell off 80% and then come back to the $1 trillion in market cap size. I mean, these aren't small numbers. These are massive, massive numbers that we're talking about for something to have a value of $1 trillion. And so for it to have that much volatility for the size, anybody who understands financial markets knows that for something to be that big and still have that much volatility, that it's really truly trying to become something huge, like 10 trillion, 50 trillion in size. Because once you get to that big, like you don't see volatility like that because of how large something is. I'm comparing this more to equities, right? If you get an equity that is in $1 trillion in market cap, like you're not going to see it sell off 80% that quickly. Like that would be a very slow, lethargic kind of death to move at these kind of numbers. So for me, it's demonstrating what Bitcoin's trying to become and what the potential is, that you can see such intense volatility at such a large size. And at the end of the day, like what we've been saying is it's trying to become global money. It's trying to become global settlement and replace that bedrock, which used to be the U.S. Treasury market, for the value of everything on the planet. It's wild to be a part of this and to see it playing out.
I know. And the really craziest thing about it is people not being able to see it and not jumping on it. But you get used to that over time.
Most people, on the last comment, how many people, like if you lined up 100 people off the street and you say, what's a really large sized equity from a total market cap size? They'd have no idea, right? They wouldn't say, oh, well, we just started getting companies over the $1 trillion mark in market cap size. That's really big, right? That's the answer. And, most people these numbers are so big, Safe, that they don't make any sense to 99% of the people you pull off the street. And how can you possibly understand something without zooming out and seeing the 40,000 foot view and looking at it from the macro landscape, being able to drill down into the smaller nuanced things? If you're not expanding that sight picture from way zoomed out to zoomed in and like understanding game theory, understanding the technical details, the underpinnings of encryption, and like there's just so much to wrap your head around, that it makes sense that so many people just aren't getting it. They're not seeing it. It's taking a lot of time, a lot more time than I think anybody would have suspected.
Yeah.
This podcast is brought to you by my friends at Coinbits, the oldest Bitcoin-only exchange. If you're listening to this podcast, you get that Bitcoin upends everything that government schools teach about money. Coinbits is the money app designed for people like you who understand Bitcoin and want to use it every day. Coinbits pioneered the concept of roundups, which converts your spare change into Bitcoin. Simply connect your debit and credit cards and your usual purchases are rounded up to the nearest dollar, letting you save more in Bitcoin as you spend more. My favorite new Coinbits feature is Spending Insights, which gives you real-time feedback about how much of your money is chasing high-time preference, short-term gratification, and how much you are providing for your future with low-time preference choices. As always, Coinbits provides a terrific self-custody experience. Connect a hardware wallet for automatic withdrawals, so you keep counterparty risk to a minimum. Coinbits also offers peer-to-peer cash and Bitcoin payments, target orders, price alerts, and more. Coinbits can help you do almost anything you need with Bitcoin. Go to coinbits.app/Saifedean and get 3 months free. Again, that is coinbits.app bitcoin.com/Saifedean, Saifedean. The Bitcoin Standard podcast is brought to you by Orange Pill app, the Bitcoin-only social network that connects you with high-signal Bitcoiners, events, and now merchants as well. If you're like me and can't stop talking about Bitcoin, you know how challenging it can be to talk to the no-coiners and how nice it is to talk to someone who gets you. With the Orange Pill app, you can find the Bitcoiners near you and they can replace the no-coiners in your life. You can organize events and meetups with local Bitcoiners, and wherever you travel, you can meet up with local Bitcoiners, all while being as anonymous as you like. So if you want to build your local network of Bitcoiners, find a Bitcoin meetup or merchants accepting Bitcoin, head over to orangepillapp.com to sign up, or download the app from the App Store or Google Play Store and send me a DM so we can get connected.
So let's try and talk more about fiat markets. What do you think about what's going on there? I'll confess I don't follow very closely anymore, and I don't have very strong opinions. But things are heating up. I mean, Treasury's interest expense is now bigger than the Department of Defense. And as I'm sure you know from personal experience, the Department of Defense spends a lot of money, a lot of bombs going off all over the world. They're extremely expensive. A lot of soldiers, a lot of machinery, a lot of aircraft carriers. These things are enormously expensive. So try and picture all the U.S. military with all of its enormous machinery and all of its incredible consumption of resources, and think about how much that costs. And then remember that the interest on the U.S. national debt is larger than that.
Yeah.
Yes. Special mention here, of course, has to go to all of the people who spent the last 5, 10, 20 years talking about how interest rates are at a historical low. So it would be shameful and wasteful for us not to take advantage of this opportunity by accumulating as much debt as we can, because ultimately we owe it to ourselves. So who cares? Well, now you've got another U.S. military size hole in your pocket, and because interest rates have gone up. So how do you see this continuing to unfold? What are your latest thoughts?
So at the end of the day, I'm looking at just like where we're at in what you would call a traditional market cycle, and we had one of the most reliable metrics, in my opinion, is just looking at like the difference between the 10-year and the 2-year on the credit yield curve. And when you look at this, we got to some of the lowest negative spreads, meaning the 2-year was giving you much better performance than the 10-year, which doesn't make any sense why you would get a higher yield on shorter duration money or debt. And so we got that compressed deep into the negative territory. And historically, when that undoes itself and it comes back to parity, the yields come to parity. That is usually a really, really strong recession indicator that is about to play out in the coming 6 to 12 months when those yields go back to parity after being deeply compressed or deeply negative. So that just literally happened in the past week. So where I think we're at in a market cycle, and this is also really interesting, is for all intents and purposes, we're at all-time highs in the equity markets right now, despite this recessionary flag or canary in the coal mine going off. You have every major business school president, on CNBC saying, "Oh, we need to cut rates because we're about to go into a recession." And again, isn't that interesting that we're at all-time highs in equity markets right as they're screaming about how we need a 50 bips cut on overnight money in order to stimulate the economy? Like these are interesting things that are playing out that appear to be very different than what we've seen in the last 40 years with respect to these, call it 7-year, 8-year cycles, credit cycles, short-term credit cycles that play out. I would argue that back in 2020, right when COVID happened, that we were trying to go through one of these. Then they stimulated like crazy. I think globally there was almost 5 to 10 trillion added into the global, more monetary units added into the system. You can see this through the M2 growth rate that stimulated, even though everybody was at home and wasn't working and the supply chains weren't shipping, we immediately bounced back to where the market was through you have the pandemic plays out. I think it was within 60 days, Safe. Equity markets were already back to where they were at. And what this does is this shows you, going back to the example I used earlier with the Monopoly game, if I push a bunch of monetary units into the game, guess what? Everything that's scarce and desirable bids. It goes up. So that's what happened. We went through COVID. It made no sense that we should be clear back to where the equity market highs were with all the impairment, credit impairment that played out. But because they shoved so many monetary units into the game, you were right back there again. So where I think we're at right now is the system is the credit is impaired deeply, especially when you look at low frequency things like commercial real estate. These things are completely impaired. They're taking some time to demonstrate the impairment. Bank balance sheets, they're sitting on all this long duration debt. All this stuff is garbage in the grand scheme of things when you can do the math, okay? And it's trying to purge itself. It's trying to undo itself. And they're already stepping into the market, trying to preemptively make sure that there's enough monetary units added. And I think it's only going to amplify in the coming 6 months to 12 months of how many more monetary units they've got to add to prevent the cascading impairment from happening, from the contagion that's trying to purge itself because of malinvestment and bad decision making. So here's the question. So people would look at this, and I think this is a huge mistake that you see people making right now. They're looking at it and they're saying, "Oh, well, we're about to go through a 1929 crash." Okay, and here's the thing: we could go through a big giant crash. But we could also go through a COVID melt up, depending on how hard they clack on the keys, right? And that completely comes down to the 10 people sitting in a room that are making decisions on how much offset are we going to clack on the keys for all this credit impairment that's playing out, okay? Because they've become very well versed that they can control the markets, they can control the prices of equities, they can control the price of everything if they just clack on the keys a little harder. And so anybody, in my opinion, anybody making a market call like, oh, the market's going down, we're going to get opportunities to buy equities at a 40% discount. Maybe it's going to melt up because they're going to front run it for a political election or whatever to keep whatever candidate in power or the new one that's coming in. I have no idea. I think that the game's totally manipulated, and anybody who's thinking that these natural market forces are just going to play out and you can predict that, I think you're the total patsy at the table. Okay. And going back to what we were talking about earlier, you have this 80 IQ guy who's just looking at the market volatility and he's saying, I don't care if it goes up or down, I'm stacking sats every single day. And he's murdering the market. So, my hat's off to the 80 IQers because they're just crushing it. They're making fools out of everybody on Wall Street, and for good reason.
Yeah, it's something that you find so often in life. I think one of the most important realizations that you make is to snap out of behavioral patterns that you got stuck into because of an ego trip.
Yeah.
And I think playing the fiat markets is this at this point for a lot of people, because for a very long time, all of their life became fixated around trying to get a return out of that market, trying to figure out what's going on, trying to figure out how do you play the market, what to invest in, that it becomes all consuming. You're constantly reading about it. You're constantly thinking about it. You're constantly trying to second guess what's going to happen next so that you can get it. And you lose track of what you actually want. You get so lost in the process that you lose track of the goal that you're actually seeking for. It's like a soccer team that just keeps passing the ball around and forgets about scoring the goal. And this is what it looks like from the outside here, having broken out of the fiat asylum, is all of these people just passing the ball around, not looking to score. Like, what do you care about? Do you want to win your office bragging rights about who predicted what they're going to be doing with interest rates correctly? Or do you want to feed your kids? Because if you want to feed your kids, we've got this incredible technology called Bitcoin, which allows you to feed them much more effectively by saving your wealth in something that doesn't get devalued. And if you want bragging rights, then yeah, go ahead. But you could also get bragging rights by just following sports. Talk about sports in the office, make that your identity. It's a lot healthier. You spend a little bit of money, a lot easier. You spend some money and you have no expectation about getting anything back other than the experience. You go to the stadium, you buy the shirt, you get the pay-per-view or whatever it is. But that's it. But then you get all of your kick out of, we are good and you are bad and I got it. And you get all of that out of your system without having to risk your kid's future on what you're going to be doing with this call. And it's, one thing that I think just occurred to me right now, I guess a great way of understanding the problem with this kind of fiat system is that in a truly capitalist economy, you're trying to predict what people are going to do, but the people you're trying to predict are individuals who are customers. So you're trying to think about how I can please those people better. And that's a much better problem to have than trying to predict what 10 bureaucrats are doing in an office.
Amen.
Because there's something good about being able to figure out how to serve customers. If you figure out how to give people good sandwiches or good shoes or good electronics, you are pushing humanity forward. You're really making life better for people. You're giving them access to better quality food or clothes or technology. But if you've managed to figure out how these 6 or 10 or whatever it is people sitting in an office are going to decide about what is going to happen with your monetary policy, I mean, that's not in any way more consequential to humanity than you being able to guess what's going to happen in a soccer game.
Yeah.
It's
maddening.
It's likely less consequential in terms of any kind of real benefit that it has. Yeah, you win the next round of Fiat Casino, but the die are going to roll again next week and the week after and the week after. You're not going to win them all. And you have to keep winning them all in order to keep your wealth. Because if you don't win them all, you just keep losing.
It's akin to when you look at the day-to-day and you look at the decision. Like I just told you, I have no idea whether they're going to clack on the keys hard enough in the coming 6 months to offset what appears to be growing impairment that's happening in credit markets. So in like a physics analogy, right? This is like being down at the microscopic level and you have no clue how things are going to act or perform. But when you zoom out and you look at like Newtonian physics, you can pinpoint exactly where the moon's going to be in 3 years from now. And so when we're looking at these actions that these 10 people were making, the one thing we do know on the long scale, when we zoom out far enough, is that, I mean, it's amazing how accurate you can be on where the debt loads are, like the U.S. National debt's going to be. I can look at it next year and I can have a pretty good idea of where it's going to be. Just by the fact it's like looking at the moon, right? So, but what decision are they going to make next week? Is Janet Yellen going to go in there and look at the TGA and load it up or drain it down? I don't know. And anybody, I think, telling you that they do know in such a short window are totally fooling themselves. And here's the amazing thing. I don't have to predict any of this short-term stuff whatsoever. I don't have to. I just have to zoom out. I have to just dollar cost average. I don't care if there's a lot of volatility. And when you do this, your buys are just smoothing. I mean, look at Michael. We talked about him at the start of the show. Look at Michael. He's price agnostic. He does not care. He's just stacking it as he makes it. And, if it's at 60,000, if it's at 30,000, if it's at 16,000, he doesn't care. He's just buying more because he knows through the Newtonian physics that it's going to be here in another 5 years. And therefore, I should own as much of this stuff as I can possibly gobble up, right? But you know what? You get so many speculators. You get people that feel like they have to be doing something, like, oh, I'm going to sell this, You know, we could name names. We're not going to name names. There's a lot of people out there running like businesses off of trading strategies and stuff. And it's amazing because the dollar cost average, the ADIQ, that's just dollar cost average, and he's crushing their performance. He pays no capital gains. He doesn't even care about looking at his tax bill at the end of the year because he didn't sell anything. He's just buying more. And it's amazing how much that adds up. Like it really, really adds up when you don't have to have the frictional burden of short-term capital gains tax or any of this kind of stuff. They're just buying more and just sitting on their hands, eating steak and enjoying life.
I know. And it's amazing that we're shouting it off the rooftop, and people just don't want to believe it. I think it's just too insulting for them to believe that it could be possible. And yeah, the regret, the idea that this could have been possible while I was doing other stupid, inconsequential, expensive bullshit that is coming back to haunt me is too painful. So I'm just going to continue to live in the denial. Yeah, but I mean, it's getting back to the fiscal position. Do you see, where do you see the bond market going in the coming 2 to 5 years? I mean, the last 2-3 years, they've been pretty terrible. So from top to bottom, it depends on how you calculate. But I think with the long-term treasuries, there was something like a 40-50% drawdown, which is enormous. This is supposed to be the safe haven asset because it's the thing that is the most liquid market, and it's guaranteed by the US government. So you've lost 30-40% nominally, and on a money that has had its supply grow by about 40%. In fact, I just ran the numbers on this. The dollar supply over the last 4 years, so from September 2019, 5 years, from 2019. So before COVID. So taking stock of the whole COVID mess and the aftermath. So September 2019 until today, 5 years, 43% growth rate in the money supply overall, which is pretty significant. So the dollar has been devalued significantly, and your bonds have been devalued significantly. And they keep making more and more bonds, and the amount of government indebtedness keeps going up. So do you see anything drastic happening in this, or just more of the same? The dollar getting devalued and bonds maybe going up a little bit, maybe going down a little bit less?
I think the long duration bonds are a cataclysmic train wreck of epic proportions. This has been the biggest bear market, I think, in over 100 years in bonds, particularly
in history. Yeah, I think since the Napoleonic Wars.
Yeah, and I think it's just getting started, especially for long duration bonds. I think that as we jump 4-8 years into the future, I think the long duration bond market is going to be completely fake and not real. And the only thing that's going to keep it wherever the yield ends up is going to be through just government intervention, and it's not going to be a real market. I think that they're going to be forced to just basically turn everything into short duration issuance because that's the only place that you're going to have market demand, like real market demand. And I think that you're going to have a growing chorus of interest with banks to become stable coin issuers so that they can buy the short duration issuance and tokenize it and collect all the coupons that are associated with the short duration issuance because it's just free money and it's not anything they really have to do. I think that you may have somewhat of a real free and open market on short duration, like less than 1 year money, because it's just not impacted by whatever the inflationary impacts are. Or I should restate that. The market price of the issuance isn't impacted. The coupon issuance will be impacted. So like if they're issuing a 5% coupon and 6 months later inflation's at 8%, well, like they're losing 3% of the buying power on that. But I think the buyer of this is just tokenizing it and they're just collecting those coupons and reinvesting it into whatever. And if they're smart and they're reinvesting it into Bitcoin, and if Bitcoin's moving out at the pace that it typically moves out, they don't even care that inflation might be eating away at 3% of their coupon. Let's say inflation's 8% and they're buying a 5% yielding coupon, but Bitcoin's moving at 25 or 50% annualized, and they're plowing the coupons for this into Bitcoin. They're hedged by a lot, and that's still a very safe quote unquote trade or operation or business model based on those types of actions and those types of prices. I think that it's going to get really hard for them to keep yields. You said, where are we at in like 2 years? I think 2 years from now, we're back to inflation prints that were on par with what we saw with COVID. We got up, they were saying that CPI was 7 or 8% or whatever through COVID in the higher parts of the prints that they were saying it was. Now, I think everybody would tell you, if you change the basket to what the typical person had or what the typical person's consuming, we were way beyond 7 or 8% annualized, way beyond that. And, I think that's how we should think about inflation, is like, what's the typical bucket? Every person's inflation is different because everybody consumes differently. But on average, I would say it was double digits for the typical person and what they consume. Where I think we are in 2 years from now, I think we're back to that. And I think it could even potentially be worse than COVID, simply because of just kind of where we're at in this long-term credit cycle and what, Fiat is trying to do, which is destroy itself. It's not backed by anything. So that's their challenge. If they were going to try and create a real market out on the long duration side, they have to start backing it with Bitcoin. And if they start doing that safe, like, I don't know what the second and third order effects are of now everybody in the world is like, I've got to own Bitcoin. And then it becomes this self-fulfilling prophecy. And so I think the government's got this chicken and egg problem, is like, how do we save the long end of our debt issuance? Well, we got to buy Bitcoin. And if we buy Bitcoin, well, then we kill the dollar and we're not able to do this charade in this Ponzi scheme anymore. So those are some of my thoughts. Now, one other thought that I have on this: if this dollar stablecoin bill ever gets passed and you start getting the major banks start playing in this space, this dollar stablecoin space, they're making tons of money off of the coupons that they're kicking off. I would not be surprised for the next step of the government to start passing legislation that if you are a stablecoin issuer, minter, and you're backing it with treasuries, that they take enormous taxes off of the free money that everybody's making in this game. So think of it like, hey, here I am banging out $5 billion a year with 100 employees. I think that there's a tap on the shoulder that says, hey, we don't mind you doing this, but we're going to pass some legislation that you're going to give us half of everything you make, right? I think they could tax this into oblivion. And the person who's playing this game that's gobbling up 5% plus coupons is going to say, oh, well, I'm still making way more than everybody else. So sure, I guess I got to play. Of course they got to play the game. But I think that's where governments go next. And I think that they're really probably pretty slow as to figuring out where all the money's going, and where they could, tap on some shoulders to start raising higher tax revenues from some of these actions. But I wouldn't be surprised if I saw something like that play out. It just seems like the incentives are going to go in that direction.
Yeah, it's certainly a very scary situation. I mean, I think obviously people are always doom-saying about what's going to happen to the U.S. government and the dollar, and yet it keeps chugging along. But there are limits to that. I mean, this is I think a major milestone. Neil Ferguson was a historian. He says this is a point of no return. When your interest expense is bigger than your defense budget, this is the end, because your position is no longer sustainable financially in the long term, you just can't keep this up. So how this is going to resolve is absolutely fascinating. It's something that you keep thinking about. But the most fascinating, the most amazing thing about it is that, again, with Bitcoin, you've got a way out of the damage blast that is going to occur from this. And you can protect yourself. And it's just, the more people get this, the more people understand it, the more people are protected from this kind of insanity. I just wish more people did.
That's why we're doing it, Saif. That's why we're talking about it. We're trying.
That, and it's also enormously interesting and fascinating, and you can't start thinking about anything else.
That's for sure.
Start thinking about
That's
this
for sure.
sort of stuff. So
Yes.
we need to do it for internal reasons more. Yeah. Well, Preston, I want to thank you so much for your time.
Thank
and
you
for joining us and for all of your insight. And keep on doing what you're doing. I should ask you before I forget, tell us more about your work, what people can find you online, and what you've been recently up to.
I'm active on Twitter. I'm active on Nostr. I'm very passionate about Nostr with all the free speech infringements that have occurred since, and that's probably being very kind to call it infringements, that's happened since COVID. So I'm active on both of those, and I have a podcast. It's in the We Study Billionaires feed. I have a Bitcoin show that comes out every Wednesday. But yeah, that's where I spend my time. Like you say, if it's all about education, the only way I think we can bridge this legacy boondoggle over to something that is fair, something that creates the right economic incentives for the world to get along and not to try to, kill each other through violence. I just think that there's nothing more important that we could possibly be working on and spreading the message of than Bitcoin. And at the end of the day, it's hope. It provides so much hope to the world that we can make the world a better place. So, yeah, that's where you can find me, and that's my message, I guess.
Excellent. Thank you so much, man. Take care.
Thanks, Saif.